Hello, everyone. Let's take our seats again. So our next chat is a Fireside Chat with Vikas and Anand. So a few words about Vikas. He's the co-founder and CDO of GoGreen Investments, which specializes in clean technology investments. He has extensive financial expertise and served as a board member at Keystone Tower Systems and Pure Services. He has previously served as CEO of GE Renewable Energy, growing the business to $7.5 billion in revenue and nearly doubling its market share to 53%. Vikas is also a member of the executive committee of the board of the American Clean Power Association, and he holds an MBA from Columbia Business School. It's an honor, it's a pleasure to have you here with us. So,
thank you for having me. Can you hear me?
Yeah.
Excellent. Well, thanks for having me. Sorry I couldn't be here for most of the day, but I'm glad I showed up in time for the last panel. That was pretty good. So if those people are still in the room, good job. That was actually very enlightening.
So if you've been here in the morning, actually we had lots of interesting discussions about aligning impact with returns. And given your experience and the fact that you're the co-founder of GoGreen Investments, I just wanted to start with that and ask you what a successful deal looks like, achieving to align these two.
Yeah. I'll be happy to give you my thoughts on it. May I take a couple minutes just to so in the spirit of getting to know your audience before you start speaking, I have a couple of questions for the audience. So if you consider yourself to be an international student, can you raise your hand? Okay. How many engineers in the room? Not as many, but good to have you. How many of you are considering a career in finance writ large, including investing? A lot more. Okay. Good to know. I'm sure I promise you I'll take some of this data into my comments. Feli, let me just make a couple of comments before we get into the discussion on GoGreen. First of all, as you describe in my experiences, I am a practitioner of the trade. So the trade being largely clean electricity. So that's kind of going to inform some of my views on the questions we discussed today. Although recently it's been a bit more of energy EV transition as well. And I actually started in this field of energy about a decade ago only by accident. I used to work for a company called GE at that time, and I was asked by my bosses to go fix one of the issues we had in our energy investing business. So that's how I got started in the energy field in 2014. And honestly fell in love with the industry right in the first few months. But it wasn't until much later, in fact, three and a half years later, that I really found my why to my career in energy. And that, honestly, that moment changed my view about my career planning and how I want to spend the rest of my career, and made it very clearly in the camp of something to do with energy transition. And I'd like to show you that picture of that why, because I think it matters to today's discussion. So in the fall of 2017, I was in my home country in India, in my city, Delhi. I was walking through the streets for some errands, running some errands, and I saw this picture. I saw this girl, probably a teenager, who was sitting right outside a shop on the sidewalk doing something. I think the first impression you might have, if you can see the picture up there, is, right, what is she doing there? Is she trying to raise money? She's begging? No. Not at all. In fact, in front of her is that blue box. That's a weighing machine. So she was there not begging for money, but trying to make money the right way, which is you could weigh yourself and pay her a couple of bucks, a couple of rupees, and move on. But more importantly, she was actually doing some sort of homework, it seemed to me. So as I got closer, you could see the paperwork and the book. And she was writing in beautiful English cursive writing. That's what she was writing. Why she was sitting there was because right outside that store was because she could get the lighting from the store to help her do her homework. And at that moment, I realized that clean electricity, which is quite frankly a very boring topic until recently, has a bigger purpose than what I had been practicing it in my business. And that goes to one of the first points I like to make to you, which is 700 million people in the world do not have access to electricity. And that's a pretty liberal definition, right? It's probably numbers way higher. Most of it is in Africa, most of that population in Southeast Asia. That's a problem in itself. But it gets bigger because majority of the population growth between now and 2050 is actually going to happen in those regions of the world. So you have a big population which does not have access to electricity, and that population will keep growing. So as you think about those of you, especially the international students, as you think about what you're trying to do in impact investing or something to do with the impact, I would encourage you to consider what you can do for countries that you come from if they're not like the United States, like India, and be able to contribute to that mission in that country and create a career out of it, make an impact, and finally, obviously, have a successful life yourself from a monetary standpoint. So that's something which I want to start with. The second thing which I'll say, and this might be controversial in some circles, but it is something that I really, really believe. So happy to take questions and push back on this, which is the following. It is not, here it goes, it's not sustainable if it's not profitable. Thank you, sir. And I think you can take those words to be literally sustainable, as in sustainable energy, or profitable to literally profit on the P&L statement. But I think something more generic than that, more broader than that. To create the transformation, to implement the transformation that we are undertaking as a society in the decarbonization space, you need ideas to be profitable. Because if they are profitable, only if they are profitable, can you sustain them for the next 30, 40, 50 years. So in that, technology is essential, absolutely essential. Government policies have to help, but capital enables. So as you think about your careers after finishing at Yale, there's a lot more to be done in energy transition beyond finance. It's important to do finance. I come from a finance background. I'm an investor on a part-time basis. But there are many things you can do to contribute to that energy transition. Entrepreneurship, like the last panel. Technology. Shout out to my engineer friends. Government policy. So think about that broadly than just finance. And I make that point because I've found, you said I went to Columbia, that's right. So that not such a great school as Yale. But I found this essential, interesting dynamic that most of the Northeast business schools or schools of management, other than MIT, produce an amazing amount of talent which goes into finance, project finance, investing. And that's great. But to solve what we're trying to solve, a university like Yale has to do a lot more than that, and I would encourage the student body to think about careers broadly. And then the third thing, and I promise I'll shut up after this and go back to your question, is that the pace of energy transition will really be set by the willingness of the society or the voters to pay for it. The estimates are around $30, $40, $50 trillion. So at some point you stop counting. But the pace at which that capital can be deployed, while it'll be determined a lot by technology, to my earlier point, but it really has to be paid for by somebody, either the voters in that country or consumers. if not today, over time. So I think, therefore, politicians have a very hard job to do. And no, I'm not here trying to campaign for politicians. They have their own reputation. But as a society, as an emerging class, or group of students who are going to enter business or government policy and so on and so forth, we must recognize, therefore, that there are trade-offs to be made. And I think in finding those trade-offs and finding those bottlenecks and investing in those bottlenecks is how you probably create the biggest bang for your impact investing dollars. So those are kind of 2 or 3 things I wanted to say, maybe to provoke some discussion later, but at least give you something to think about.
So going back to my initial question.
Yes.
But also now you gave me more food for thought. So I really liked, and I told you before in our discussions, your belief that whatever is not profitable is not sustainable. And I want to link that with the question of how do we ensure that clean energy is equitable? And it would be great if you could illustrate this point by way of the work that you're doing and an example that you're doing at GoGreen Investments.
Yeah, so look, the obvious place, there are many ways to do that, but the obvious place is where I started, which is starting with accessibility to electricity. But maybe we leave that to the side because we are here in Connecticut, in the United States, and that is probably a limited issue for the most part. One of my positions that I've had is I was responsible for GE's wind turbine business in North and South America. So that's really designing, manufacturing, installing those massive turbines that go up, which are mostly in Texas and Oklahoma, not many in the Northeast, although coming soon to a shore near you through offshore wind. And I found that every time we constructed a wind farm in a community, good things happen. So, talk about equity. In some ways, to do the job that we had to do to construct a wind farm in a community, we needed a social license to be there in the first place. Because, let's face it, it's disruptive. It encroaches on some sort of an agricultural land, it's a trade-off, right? It creates a lot more traffic, especially of transitory population that don't stick around and pay taxes, right? So the social license we obtained when we did it right was actually to be very, very forceful and purposeful about giving back to the local community. And that took many forms. Of course, number one, jobs. Number one is jobs. But to what extent we could hire local people or attract additional talent to that area, technicians, therefore create bigger tax base. To what extent we could actually contribute to the local school system in many ways, monetary or otherwise. To me, that's really what is an obvious effect, or I would say prerequisite to what we did. So policymakers will probably have a much more broader way of looking at equity, and there's a lot of discussion going on right now about it, especially under President Biden's administration, rightly so. But I have practiced it that way. The current venture that I'm involved in is just GoGreen Investments, which we just made our first investment in a green metals, green nickel mining company, which is essential for EV transition. It's a big bottleneck, so investing in bottlenecks usually pays off if you find a unique solution to do it. The mine is not in Massachusetts, it's in Tanzania, right? And when you go to Tanzania, other than the fact that the cell phone coverage is better than in Connecticut, put that to the side, it's obvious that if we do this right with the right kind of ESG principles, good things will happen to the Tanzanian population. That is consumer, jobs, economic activity, revenue to the government, and so on and so forth.
Did you receive any pushback from the local community?
You always do. It's always about trade-offs. Let's face it, I mean, it's impossible to get an offshore wind farm permitted off of Nantucket, right? So there's always pushback. And I would say it's fair in some cases because they've had bad experiences with companies who have tried to do that previously, left more pollution, left more disruption, so on and so forth. So back to my point about social license, the only way the company that we invested in can be successful is if they actually work with the local communities, invest in them, yes, relocate them, that's necessary to construct a mine, but do it in a way that actually is a win-win. So I think that matters a lot. It is actually a prerequisite to being an entrepreneur in the kind of work that I do. And I think that's good. I think that's really good, that actually there's more visibility and transparency into that angle today than ever before. And therefore, with every action we take in preserving the climate, you're doing it alongside social justice.
Mm-hmm. And this gives me a very good bridge to my next and last question before we open it up to questions. About how you see the role of policy. So you talked a bit about politics, but what's the role of policy in promoting energy transition? And do you have a comment in the differences we see between the way that the EU policies have been formed as opposed to the US ones?
Yeah, look, I think a lot has changed in the last 1 year, both geopolitically as well as from a policy standpoint, and in some cases one form informs the other. There's no doubt that the Inflation Reduction Act, which is kind of the legislation that was implemented last year or passed last year, being implemented as we speak, is a historic one. It's a game changer, is the way industries describe it. I couldn't agree more with it. What has been fascinating about Inflation Reduction Act, and you probably mentioned that I was on the board of a trade association around clean power, but what is fascinating about how IRA was constructed, and I give whoever was behind that legislation a lot of credit and a lot of respect, is that they've combined not just the subsidies and the incentives for investment in preserving a climate, but they've also done it with a reindustrialization of the United States, back to social license meets jobs, and quite a significant focus as well on equity. So it is a terrific piece of legislation. Can you find faults with it? Of course you can find faults with it. It's ultimately a document which has a bunch of trade-offs, right? But as a practitioner of the trade and as a citizen of the US, I would say this is a historic one. And it's going to create hundreds of thousands of jobs of all sorts, in all sorts of communities, not just in New York City with financing, but also in Texas and Oklahoma with technicians, and allowing them to unionize when it makes sense, or at least they have the right to do it. I think it's phenomenal. Europe, on the other hand, I just don't know where they stand right now as a group of countries. They have a lot to deal with because of what's going on in Ukraine, and I think the challenge EU has is a well-documented challenge, which is what might work for EU as a group does not work for individual countries, and therein lies the problem, which has been well analyzed and understood, which is to optimize a system, you have to sub-optimize the subsystems. And that's the kind of the challenge they're facing. But what I would not want to see as a practitioner is a replica of IRA in Europe, i.e., a lot more subsidies to build supply chain in Europe. I can understand why European Union might want to do that, but the side effect of that is going to be a lot more localization of products and services. So think of it as China, Europe, United States, and then there are probably other subgroups, maybe South Asia as one. And the moment you start localizing to that extent, costs go up significantly. I ran GE's wind business in Brazil along with my responsibility in North America. And the wind turbines in Brazil, by the way, requires a lot of localization, are easily 30 to 40% more expensive than the United States. Guess who pays for that? So back to my point about trade-offs, EU has to come up with a policy that allows for all those targets that they keep setting, and everybody loves to set targets and have a roadmap. That sounds good. We got to get going with it. So that is TBD in my mind. But as a business person, I don't have a vote in this, but if I had, I would caution them to create one more barrier to products and services in a way which is detrimental.
Excellent. Well, a lot's going on at the moment in Europe anyway, but I keep your point before that policy can facilitate equitable access to the energy transition. And having said that, can we open up the floor to questions? Nick, I see you have a question.
So earlier you kind of mentioned that, there were sort of these different silos within renewables where it was either from the financing side, technological side, or policy side. As an investor, are there different ways that you can support those two silos aside from direct investment?
Look, I think to be a successful investor in this space, you almost have to reconcile the two silos. And then a third side of capital availability is where you stand. You have to do it. I think the challenge for an investor today, in fact, some would say has always been, is that to the extent a business proposition is on the right side of government policy and right side of technology, i.e. has been de-risked, there aren't enough returns in that space because it's, by definition, a lot of capital has already flown into that. So therefore, the question really becomes, as an investor, how do you find that idea which might be a little contrarian at that time, might be against some of the policies, against some of the ESG principles, but you can see more good in it than bad from a risk-reward standpoint. And that's, I think, where I think the alpha lies. We were spending time on this mining company in Tanzania. It struck me as kind of had an epiphany, which is, if you think about EV transition, one of the biggest bottlenecks is critical minerals, which I think has been a lot more talked about in the last few months than ever before. The problem with critical minerals is that it is heavily localized in certain countries. And that doesn't mean that other parts of the world, like the United States, don't have access to these minerals. It's just that it's impossible to build a mine anywhere in this country. So ESG, on one hand, is creating a demand for these critical minerals, and ESG, on the other hand, is preventing capital to flow into this industry. And recognizing that kind of contradiction is a big part of our investment thesis. And we'll see where it goes, but I'm feeling pretty good about the fact that if we do this right, do it properly in Tanzania, give it a public listing in New York, which gives us the transparency that it needs to alleviate any concerns you might have or anybody might have around how this mine will really get built, around transparency, corruption, and whatnot. That you could be somewhere in that zone of contradiction and yet have a impactful investment, which is kind of what our thesis is really about, and that's what we are undertaking. But I think that's really a good example of what I would say, which is there are silos, and sometimes the same issue might create a push and at the same time creating a pull. But investors have to figure out how to reconcile the two, or at least take one side of it, of the view, and see if that works out.
Do we have another question?
Hi, Vikas. Nice to see you again. I'm Carolina, a first-year MBA and also Masters of Environmental Management. I was wondering if you could share more, maybe relates to some of the comments earlier, but you showed the picture of India and sort of the potential that that country and other emerging markets have to change their energy system. So I was wondering if you could speak on your perspectives on that, the risks and opportunities in those countries.
Yeah, look, I think I've found that there's no lack of entrepreneurs in those countries trying to figure this out. What I have found, however, is that we haven't figured out how to get capital to those countries or to those entrepreneurs. So I go to enough of these investor events and talk to enough of my investor friends. And generally the view you will hear is that there's plenty of capital available for energy transition today. So I'm going to say something which is, I think, controversial, but I believe it to be true. And that is that view is not incorrect, but it's incomplete. And it is sort of an elitist view. So I come from GE, where every time I needed to build a plant or lend money to a project, I just had to call my treasury and then they would send me the cash. If you come from a large banking institution, you probably will have the same view, right? Capital is freely available. But if you're trying to raise capital in Tanzania or India at scale, that is a very, very difficult proposition. And if it's not difficult, it's damn expensive. So therein lies the dilemma of how do you solve energy transition in an equitable way, and how do you find pools of capital that deserve that kind of investment in those countries. And I think that's where technology matters big time, Carolina, because to the extent you can solve those problems in these developing countries with using technology, financing becomes by definition easier. And government policy